Yes, good morning, guys. Thank you so much for watching my YouTube channel. Today we are going to see what's going on with Amazon. And guys, let's go to overview. This is the today overview, and we see Amazon is 175. And let's see why Amazon people are buying Amazon and Apple. So guys, remember there are two big tech which are people loading. So number one is Apple, two Amazon, and number three is coming is a Tesla. But now let's see Amazon. So today I will go to do Amazon, Apple, and Tesla, and all of them we can start with reviewing what's the forecast technically and also the part of the chart. So 175, which is 1.7%, $3 up. So it started 172 today too, and right now we are going here around let's see technically. So we are going to see technically and focus. So on a daily, guys, this is a good thing, still indicating neutral. It's not it's not a pie but a neutral, guys, is telling you maybe it's the best time to entering and to start to buy on the daily. And when you go something right here, like 5 minutes ago, we see people loading after market today, and 15 minutes, like people are really loading. 4-hour charts is now started to be neutral, and the daily is a new. Right now it's already turning buy. Remember, stock is pushing, guys, and it was some few seconds it was a neutral, and now it's already indicating buy, and later by Monday, Tuesday next week will be very strong buy. The best time to buy when it's a neutral, you start watching like small time frame, and you see the wells is loading. So it's a big money, smart money is loading on Nvidia, and not Nvidia but Amazon. So Amazon, smart money is loading on Amazon, and the best thing, you see the medium target on Amazon is 219. Remember, guys, this thing 2022 it came all the way down here around 94, 84. I mean 84 is already doubling, you see. And this is a growing stock, guys. Amazon is going to be more than 1,000 in the next 5 years. Yeah, it's going to next 5 years to 10 years. And if you buy right now, like this is like this is why I love two stocks, Amazon and Apple. Like you are a guarantee, like if you buy, you will not lose a lot, and you will still buying like the other day. This dip became 165. You see, this is the dip that you are supposed to buy. Let's start another dip. We saw another dip here, 125. It pounds, it make another dip, 145. Another dip, we saw dip which is 174, double bottom, and then here 184, it was double bottom, and then this round it dipped more, and that's when on this September, this is the time you are supposed to buy more on this stock. And the highest is targeting, which is 43% in next 12 months, and that will be 251, and it's going to happen. And so guys, remember, I will go to do Apple and Tesla. Today I want to the first video. No, let me do only Apple today, then on Amazon, and then we'll follow by another video for Apple. So you see, guys, this thing today, remember on the dip that I was telling you, after earnings it came all the way to here around 153. It tried all the means to stay above here, and during that time, let me tell you through what happened here. The day was dipping, it dipped here, and then some few when it break 200 moving average here, 170 is signaling buy, and then it hit here 150 moving average and 100 moving average. It acted as like a resistance at 181, and then it dipped. Yesterday we went up we dipped below, and we closed above here 171, and today we pull back over 200 moving average. And when you see on MACD here is telling you volume is coming in on this one. Remember, we have this resistance around 182. Okay, you buy right now, you will be have $5 on profit, or $7. Yeah, $7 on profit, and it's going to be acting like a resistance on this stock. So today we are going to hear this news, and then later
check on Amazon. Those shares are down about 4% after reporting weaker than expected revenue for the second quarter. Joining us now is Scott Devitt from Wedbush. Scott, they did face $1 billion currency headwind on the top line here. I don't know how much of that was factored in from the beginning. And AWS, a little better than expected. So what do you think of this reaction? Good quarter, mediocre quarter?
Yeah, hi, John. I'd say mixed. So the headline revenue number isn't really where investors focus, because so much of that, almost 110 billion of the 150 billion is just retail, and that's impacted by 1P and 3P mix that get booked differently. But where the focus tends to shift to quickly is operating income, where they did beat with a 9.9% margin versus consensus at 9.2. As you mentioned, AWS at 19%, that's the fastest growth rate for AWS going back to when the business started to slow a couple of years ago. But the nit is the advertising revenue. That came in at 19.5%. Consensus was 22. So Meta advertising grew faster, and that was a pretty good deceleration from the last quarter. So we'd like to learn more about that. I think to me, that's the one thing that stands out as the negative, but the AWS is quite good.
Now, Scott, if that's the thing, if advertising revenue is the thing, has that become so important that if you believed in Amazon's story a few hours ago, that you question it now? Is this potentially a buying opportunity if the stock trades here tomorrow? Or no, this is an important growth area?
It's an important growth area. I think you want to know, have a better understanding of what caused the deceleration. This is a $60 billion kind of revenue line that investors anticipate is going to grow significantly over time. So you want to be certain that they can keep an elevated growth rate for a long period of time. And personally, when you look at the entire report, I think a pullback is a buying opportunity. I think the strength in AWS overwhelms the advertising. But if I'm being transparent about it, the advertising is that's not a good number relative to expectations.
So it sounds like probably a lot of questions about that on the call.
So guys, if you notice when they're doing this video, you see Amazon, by that time it was negative 4%, and the stock was trading 176. It lost $7. So, and when you hear about this guy from Weblu, is targeting $224, which is a lot of percentages, above 20%. And Amazon is going to be one of the benefits, because this thing is not skyrocket. It's always is a growing stock, guys. This is a growing big tech. Like, you buy today, in next 6 months or 1 year, you have more than 30% to 50%. Okay, let's go on.
That's not a good number relative to expectations.
So it sounds like probably a lot of questions about that on the call. So you got shares down 4%. I mean, up more than 20% year to date. Expectations were pretty high going into this report. Even if you look at the consensus numbers for revenue, for operating income, they were at the higher end of Amazon's own guidance, higher end of the range of Amazon's own guidance in terms of what Wall Street was expecting. So I guess just how high was the hurdle for the company to cross today to be able to see a positive reaction here in general?
Well, in hindsight, it was high, right? But AWS performed. So expectations for AWS were rising going into the print, and it exceeded expectations. The advertising number, if you go back to Alphabet, YouTube's dealing with something a little different in terms of video advertising inventory growth. But the core search business outperformed expectations by almost 200 basis points. And then Meta had a very strong quarter and a strong guide. So you would have expected going into this print on the ad line for Amazon, it would have been a good number, and it wasn't. So that's where the expectations miss, is really centered. Overall, Operating profitability, very good. Revenue is what it is. I call that in-line-ish because you just don't know that mix shift dynamic that's happening in retail, and you want to focus more on the operating profit line more than anything. So it's a healthy number, but not perfect.
Okay, very quickly here. How much is CapEx spending on AI going to matter? How much do you expect them to talk about it in this call?
Quite a bit. So we were expecting 16. They did 17.6 billion. So just like everybody else, we're all kind of catching up to the real numbers, and so the CapEx was higher than expected. And I think investors will look for more information on that. We'd expect them to spend